Good morning and welcome to Trading with Larry. Um, wow, we got the triple box threat right here. We It's Larry Benedict and joined by Eric Shamalov, and we have a special guest who is on our staff. He brings the product to life. Clint Brewer, welcome. Another analyst that works with the product at the Opportunistic Trader, and I welcome you to the podcast today. And he'll be filling in for me when I am either traveling or stuck, and he can join whenever he wants. So, welcome. You want to go over your background a little bit and let
Yeah, sure.
everybody out there know a little bit about yourself?
Yeah, appreciate you having me on. It's great seeing everyone. So I've been in the investments industry about 20 years now. Started off in sell side equity research as part of a team. We covered industrials, so companies like Caterpillar, and what we would do is write up research reports, make buy sell recommendations. We had institutional clients, more the hedge funds and mutual funds. So did that for a while. After that, worked in asset management and a couple of different roles, managing different products. So I managed a dividend and growth strategy. Also managed a tactical equity strategy, which is kind of interesting given everything that's going on, because that was a lot like a volatility targeting strategy that maybe you'd see CTAs running to an extent. So did that for about 10 years, and then I've been with you, Larry, a little over a year now as an analyst here at Opportunistic Trader.
Well, listen, it's a great addition to our staff. I want people out there that are watching to understand that and appreciate, and I appreciate just the work that's done behind the scenes to get the product to come to life, to get the research information and trades out to the clients and subscribers so that they have the opportunity to make money. And again, I appreciate it, and I'm glad you could fill in for me and then join me whenever you'd like. And looking at the markets, obviously you're probably watching the show in the background, so you kind
Yeah.
of know a little bit of my mantra, which
Yep.
right now is not coming to life. But again, markets are higher again this morning across the board. Interestingly enough, a trade that I was touching on over the last couple of weeks that has been working is this Europe US trade, which is now out another percent ish. So you got the DAX still up 21% for the year, but now you have the S&P up 3, where that spread is narrowed about 4 to 5% over the last week and a half. Not really sure why. Maybe it's a little bit currency related, but I've been keeping my eye on that, and that's something that I'm still focused on and think that could continue to go the same way. And looking at the bond market, Eric, which we've been talking about, I'm going to bring you in. That got up to about a 451 yield yesterday as we were talking, and we were thinking kind of yields were going to go higher, bond prices lower, but I'm wondering why that did not materialize, and now the bond is sort of back in the middle of the range at about 443. And I'm just wondering both of your guys' thoughts potentially on this. So I'll throw it to you, Eric.
In general, I think some of these macro trades out there right now, they're kind of one and done. It feels like I don't, there's no big trend to ride at this point. Wherever you look, so I think it's some of that. I think it's a lot of people like you had a big day if you're short bonds last week on the jobs number. So it feels like a little bit of profit taking. But we're going to see tomorrow with CPI whether rates are really, going to go up from here.
Well, I don't think, my looking at it, I don't think that really it's sort of range bound, and pre the number non-farms on Friday, which came in at 140 versus 120. Yields were down at the low 430s, and we got back up to above 450, 451, and now we're back inside the range. And I think even if the CPI number comes in line, or a little bit weaker, showing less inflation, I don't think they really have anywhere to go in my mind. So you
Here's the
know,
30-year yield, by the way. So yeah, it's range bound. Tomorrow, I'd like to see it. I'd like to see yields pop back above this
yeah.
trend here, and
Or you're saying
maybe a
higher yield, lower
higher
price.
yield, lower bond price. Yep.
Yeah, I mean, I don't think you're going to really see an extension of this move unless the number is a little bit out of whack. But right now, it seems like inflation has been trending lower. I'm not really sure why with tariffs, etc., but they've been trending a little bit lower over the last few months. So maybe this is the month of a culmination. Clint, I don't know if you have any thoughts on that, but I'd be interested to hear what you're looking at.
Yeah, no, I mean, look, yeah, I think a lot of it's going to hinge on the inflation number tomorrow. I know it's supposed, right now the consensus is for headline and core to accelerate a little bit from last month. We'll see what happens, but I think just with the bond trade, especially looking at the 30-year, I think you can just kind of be patient and wait and see if we get that upside break above 5%. Because I mean, look, going back to last September, I mean, it's an uptrend. I mean, it's higher highs and higher lows. And right now, just off we briefly went above 5% at the end of May, and I mean, it's a smaller pullback just below that level. I mean, if we go above that level, I mean, that's the highest the 30-year will have been in since 2007.
Yeah,
And I think you're in that range. You kind of wait, or maybe look for a mean reversion opportunity if we start to reverse higher.
Yeah, I agree with that trade. I mean, maybe wait for, bonds to tick up a little bit more. Maybe I think the trend is still intact of lower bond prices, higher yield, but the moves contracted in here to really, we're talking about 10 basis points, plus or minus. And if you remember going back to last year's numbers, I mean, we were moving 20 bips, 25 bips, every single number. So like a quarter percent. When we saw higher CPI or lower CPI, or, a jobs number that was off, we were getting monster moves, especially on the long end. But what I think we've seen, though, is a yield steepener continually. Doesn't matter if yields coming in or yields are going higher. This steepener trade seems to be really probably the best way to play it. So if you're playing for higher yields, obviously the 10-year is where we mostly trade. I used to be a 30-year trader. That was the only thing that really traded. And then as time went on in the middle 2000s, I switched to become a 10-year trader. But 30 years are where everybody who traded bonds, prior to, let's say, 2005, cut their teeth. I mean, that market was one of the greatest trading markets that I've ever traded in. I mean, the amount of volume and the amount of risk taking by what they call locals, which is people that trade their own account on the floor, was epic. There was a guy named Tom Baldwin, and I don't know if you've ever read about him, but
He was in on Market Wizard books, right?
yeah,
Yeah.
legendary bond trader. Legendary. But Baldwin would take on like literally like Solomon Brothers, one local. So, that's where all the trading took place. But over the years, obviously, with the changing of to electronic trading and no real floor trading, that speculation has come out of the market for individual traders. Banks are so much bigger, and you know all over. But back then, it was really run by locals in the pit. So we've switched to really look at the 10-year, but really, I think the trade here potentially is in the 30-year. Like you said, move above five. Um, we made the highest yield only a few weeks ago. I think this thing got up to 504, 505. I know the 20-year, which is interesting, has a higher yield than the 30-year. I don't know if you've looked at that, which is very, very interesting on a duration basis. But
Yeah, so I was just looking actually at I've got TLT pulled up, which is the ETF tracking the 20 years price. And for those watching, if you prefer to watch an ETF versus trying to pull up what's happening on the yield side of things, TLT looks interesting just because if you do get a breakout over 5% on the 30 year, that would probably correspond to this thing giving up the, what is that, like 82,
Mhm.
which that would be, I mean, it's pretty much the 30-year yield flipped on its head, is how that looks. And so you get, I think a big breakdown there. And just, I don't want to change the topic, but if you start to see a breakdown in TLT because you're getting rising yields, what does that do to the tech trade? Just one thing I've watched here recently, we wrote about it in your e-letter, Trading with Larry, is the Mag 7 ETF. So if you look at Mags just very recently is not making a new high on this rally along with the rest of the market. Just something that, is there a correlation there between what might happen with yields or what's setting up to happen with yields and some of these big cap tech stocks that have been propping up the market?
Yeah, you know what? That trade worked really well in 22, 23, where, the whole mantra was, hey, higher yields, these tech companies are not going to have capital to speculate. Money is harder to borrow. But, I do think that trade may be there, but not like what it was. I don't think people are really concerned right now. The mantra is to buy now, ask questions later. I thought it was interesting yesterday, just before we get off the bonds. I'm looking at TLT, and interestingly enough, and I'm not really understanding this, but I thought earlier this year on in May, on May 22nd, the TLT hit the low, which was 83.30. But interestingly enough, in 2023, it made a low of 82 and change. And I don't really remember. Maybe that's exactly what you talked about with, tech having a problem when we actually made the highest yield on the 20 years. So maybe that'll come into play. But right now, it's so close to that level and it got down there and it really didn't come into play. So I don't think people are looking at the same type of trade that we were at one point in 2023 when yields were popping back up at this area. So I'm not that concerned with that. But again, they may throw that in potentially as an excuse if the market does trade lower. And like you said, the Mag 7s were really cued in on that in 2022, 2023, but I don't see that, today. But, we'll keep an eye on that. And,
The reason people, I think the reason people kind of latch onto this idea that rates affect tech is they think that tech earnings have this like duration to them, where if rates rise, you know, the earnings should go down. But we just haven't seen any of that. Whether it's tech or even the relationship with gold, all of that has been out the window the last like 3 years.
yeah. Well, let me ask you guys, what do you think of this? And this was really my takeaway from yesterday's trade. It's really been this way for a number of days now. We're setting like record low volume every single day. Like yesterday was abysmal volume. I asked Thomas, who is out, he should be back in a little bit, to come up with these volume figures, which he may or may not have, but these are record low volumes. And markets making new highs of the move on no volume. Volatility is inherent in single digits. pretty much for these straddles that we look at. And overall, we're printing a 17 or, high 16 handle volatility. And like, how does that stay where we don't have any volume extension? We have prices going up, but slowly going up, and volatility coming in. So maybe that's a recipe for topping, and then throw in the fact that all of these firms who in April lowered their year-end targets to the low 5,000s, okay, and even lower, to now everybody's in the mid, 6,150. I'm seeing crazy, crazy upgrading of price year-end price targets. So, you know, how does this stick where the market went from extremely bearish to extremely bullish, and we're probably in inning, who knows what inning, but we're only 1.5% from the high. So I'm wondering if you guys have any thoughts on what you think is going to
Maybe
play out.
maybe it's a recipe for short squeezing. I mean, we've seen this before when the markets kind of just pick up
Yeah, but
momentum and just
how are you squeezing a short when everybody's long? I mean, the bottom line is having low volatility at 16, having no volume, having small up moves. I mean, I don't think the way I always see the squeeze, and maybe you guys can add to this, is like we might have a negative news. Let's say we have this fake meeting in London that somehow is going on for the second full day, come out and it's not as bullish and the market trades down 100 handles, and then people start pressing the short, that gives you the extension up. But right now, who's shorting? Like, it's no volume, there's nothing going on, the market's drifting higher slowly. We spoke yesterday after the close, and you thought the close was horrendous. Like, you thought it was like almost the apocalypse. I'm like, I don't know what you're seeing.
worse than the apocalypse.
So, like, you were like, "Oh my God, the S&P only closed up 2. It was
I
up
know
12."
it's
I'm like, "Are you high?" I'm like, "Nothing is even happening." So,
no,
so
when the
you
markets do
know,
this, I just want it to keep going up and up and up, and I love
well,
when the bears get really upset with it.
but you were bearish. That's the thing. Like, I'm like,
I
"There's
know.
no move." I'm like, "That's not a move." What's happening is it's tricking people into thinking like what you're thinking. Last night was a weak close relative, but it was a zero on the radar of 1 to 10 to get bearish or short. It was like a 2. It wasn't. The market was still positive on the day. Very light volume. You're talking about a 10 handle move, and that can't swing you. So, like even overnight last night, if you look at the trading, it was up a lot. The S&P was up 30. I don't know. I was actually going to check in with you to see if the meeting was over, but it was 3 in the morning in Europe, so I didn't think they were still meeting, and so I didn't bother. And
I
we
didn't
were up
stay up
we were
that
up
late. I
30,
didn't.
and then we came into negative on the day, and then just drifted back up 10 handles. So, from what I see, it looks
And
like.
I was trading that last night. I didn't understand why the market did what it did at all. And when I didn't, and I was on the right side of that, but I didn't get it, and I just got out
How
because
are you
I
on the
didn't see
right
any
side of
kind of
that?
news out there.
How did you get on the right side of it? You were bearish for 10 seconds on the close, and then you got long.
Yeah, I think that's exactly right. Yeah. And but there was trading last night for sure in gold and in the ES. I think since Liberation Day, I think the easiest like trading actually has been at night, not during the day. And then that kind of went away as the market became aggressively bullish here. But I think it's kind of coming back.
Well, I would
Yesterday
say
was a good example.
I would say this. I would say, looking back on the last few months, which again we talk about, if you kind of fell asleep, you missed like a 60% move up and down in the market, which is unheard of. And we're back above unchanged, but slightly higher. It's like we went from max uncertainty, max I wouldn't even call it max panic. It wasn't Jim Cramer was max panic on Friday on his show before we made the lows, and so he said we were going to crash. Um, but he was max panic. But there was a little panic out there for sure. Vol was up at 50, 60. And then how do you come in a month and a half later and have no uncertainty? Everything is back in place. There's massive growth. There's no inflation. And people were talking, we were already in a recession. So I don't know, Clint, I'll throw it to you, and I want to kind of segue a little bit into what's going on with the dollar. But, in your thought process, how do you look at something like this where you have a 60 vol and definitely a sustained vol of over 40 for weeks at a time, which is very rare in
Yeah.
general in the market. So, what do you make of that?
So this is where I think it helps to kind of get in the mindset and understand how CTAs involve targeting funds and risk parity funds who operate within a risk budget, and how their fund flows are going to be influenced by, just track the VIX index and how they're positioning. So I mean, these guys operate on a risk budget, and so when risk, i.e., the VIX, starts going up, I mean they are forced to cut their exposure. But the thing is these guys all follow similar risk models, and so they're all getting the same signal. And so as vol starts to spike, you get all these guys rushing for the exits at once, which drives price lower, which drives vol higher, and it becomes this negative feedback loop. I think you got to the point in early April where, I saw something that like CTA notional exposure was the lowest since the pandemic. You had VIX at the second highest close, or the highest close since the pandemic. Like, all it was going to take is a little, VIX is a very much a mean reverting thing. All it was going to take is a reversal to force those guys to come back into the market. And I think that's what you saw like really early on, is that especially when VIX got back to around 30 and started to drop below the 30 level. I think that's what that happened in, April 21st or so, and I think that was probably a big catalyst to force these guys back into the markets. And then right now it's become a positive feedback loop where markets have stayed calm, VIX has stayed low, which is, allow these guys to stay invested. I think, what I would watch for is, whether it's a Trump headline or an inflation headline. I think if you start to see VIX start to move back above, say, the 20 level, you start to see these guys head for the exits again, and that could be kind of your catalyst to push things lower. But I think right now we're in that kind of that positive feedback loop area where a low vol is just kind of keeping these guys invested, and it's, looking like a calm market on the surface.
Yeah, I kind of agree with that. Again, I was surprised. What took me sort of by surprise was the fact that as a mean reversion guy, which is a lot of what I've done through my career, is the market didn't mean revert at all after having such an extended move. Now that mean reversion trade is out because now if we do mean revert, I keep talking about the 5800 level on the S&P as the area for me to add in and to the short. But what's hard, okay, is nobody can see that right now because everything went skewed to the other side. And, again, today we're sitting about 2% or less from an all time high. So, the question, I guess, is when we're going to, break that. But, I really want to touch on this dollar because I'm just shocked. Like, if you ask me what was like a false clue in here, and the false clue is the dollar. Like, why is the dollar such garbage if, in fact, our market is back and quote unquote our problems, which I don't know if they're over, but our problems are pseudo over with, tariffs and inflation and all of this, which I don't believe it is. And that's why I think the dollar's hanging, at these low levels is because people think there's going to be more shoes to drop. And that's really, equities are big, obviously, and it's most important to everyone that probably is a viewer of this show and a subscriber to the Opportunistic Trader. But really, the currency market is the biggest market in the world and the most really important market. So it's throwing, like, to me, it's throwing shade on the rally, even though, you can't argue with prices. So you know, I think the dollar could have a leg lower here. I'm a little nervous to put this trade on because really the dollar against the euro should be below 110 and it's trading at almost 115, which is high levels. So I guess dollar's not really coming into play in the equity focus, but it always does at some point. So right now they're ignoring that part of the trade. So I think we have to keep an eye on the dollar, see what goes on there. Yen is holding at like 144, got down to 139 on the low in the S&P, but never really rallied back. I mean, this move started from 162. So these are big moves, way bigger moves than the equity market. So on a relative level. So I don't know if any of you guys have any thoughts on that or whether that's going to play into the trade moving forward here.
I think the dollar is telling you the reality. Stock market is usually emotional, as we could clearly see this year. And then you have the dollar. The dollar is a currency, so you need currency to transact. And I think the fact that it hasn't been going up, despite the fact that interest rates have been higher, should really tell people a lot. I mean, typically, we were talking about relationships earlier with interest rates, and how a lot of traditional relationships have been out the window. This is another one. Interest rates and the dollar. Usually, you're going to see rates higher in the U.S. equate to a higher dollar, and you haven't seen that. I think that's a reflection of what's really happening underneath the headlines. They're just not. There's. I think there's less volume in trade. Obviously, that's one. That's the case, and also I think a lot of that is de-dollarization underneath it all. Net
Yeah,
the world
but
used to
don't
be a
but
net
don't
seller
you
of treasuries.
but don't you think that's really, you know, prevalent to trade? Like if they thought that there would be trade deals all over the place, people sort of giving in or having to make moves because of tariffs, maybe they realize the slow play here is the better way to play it, and they've been able to get away with it so far going into the third month of tariffs that are really either not in or not impactful. Um, one thing I want to talk about bringing us away, from currencies. Um, let's just touch on oil, because oil is out above 65. I still haven't done a trade. I'm waiting. I probably missed this, but again, it's slow. And when you trade options around this, it's hard to really make a lot of money when the market's moving less than 1% a day. So I just want to, keep my radar up there. It's almost 66. Hasn't been here in a while. I
So
don't
what's
know.
the play? Do you want to be long, or you want to
Yeah,
get
I
the other
want to
way?
be long, but I'm waiting for a pullback. But I don't see much in general going on there. And then, gold, is sort of stuck, is down, uh, overnight a decent amount and, came back a little. But really, the trade that I'm seeing, which is really interesting, and this is what I don't understand. I mean, it's so algo and like when I was trading, we used to look at, Europe, Asia, and that would give us an assessment of the US market. And it's almost the opposite. Like if the DAX is down, there's probably a good chance we're going to be up. And I just think these are correlated in a weird way. Like I'm looking at the DAX down over 100, and, we're not up a lot, but we're not down. So this is like the second or third day in a row of this type of trade. So that's something I'm queuing in on. But let's talk a little
Well,
bit.
we're going to get an announcement today, I think, something, right?
Why not? Dude, why not
We-
go another day? They're drinking. They're in a really nice, probably place in London. Like when they had the first meeting in Geneva, they were in the nicest compound in all of Geneva, which is really nice. They were hanging out in there. I think they were fine. I mean, I
So
don't.
basically, you're saying all of this, all these meetings, all these tariffs are an excuse for company events overseas.
Exactly. It's like a happy hour or whatever. But I
Yeah, I
don't
could actually
know.
see that. I could
Listen,
actually see that.
I expect coming out of the meeting, um, obviously, I don't expect any kind of deal at all. I don't think the market is, but they're going to come out and say, "Oh, they had fruitful talks, and
Right.
we're moving forward." But I thought it was interesting. Late yesterday, Trump came out with a comment basically saying the Chinese are impossible. So I don't know if you guys caught that. I think it was in the three
No,
o'clock.
that's an incomplete. That's incomplete. That was one part of his statement. The other is all he's hearing is positive feedback from Greer, from your boy Lutnick, all that.
No, I'm not saying that. I'm just saying I don't know why he's, coming out like that, but whatever. That's just part of the game. I don't expect much.
Exactly.
I this is what I would ask you guys. Like, and I know we talk all the time about it, but why do we want a deal? Why don't we put in max tariffs, let these guys feel the pain, let them come begging to us for a deal rather than, cut tariffs on ourselves, delay them, cut them, whatever. Um, I'm not sure why we're doing it. I don't understand the end game here, but I think once this, let's say they do, some kind of trade deal with China at some point shortly, then what? What's going to make the market rally at that point? I mean, it's going to be interesting.
I know
One thing,
everyone's fixated on China right now, but I mean, the other thing, that's grabbing all the attention. But I mean, this whole 90-day pause thing ends in like 3 weeks. It's like right on the 4th of July, right? That all this goes away, and no one's really talking
Does
about it,
it
right?
actually hit right on the fourth? That's crazy.
I think it's maybe, yeah, July
It's right
5th.
around that day. I don't know if exactly the 4th, but I mean, it lines up.
Right
Yeah,
around.
right, but you know what? You know what's going to happen. He'll probably keep, basically put the tariffs in again. Then the market might go down, and then he'll take them off, and then you'll have that short base again in the market, and we'll rocket to all-time highs. So
The taco trade.
exactly,
Well, what are these trades going to? These trade deals are actually going to look like? Do you think they're going to be piecemeal? Like, I think he's trying to trade tech exports for rare earths, right? That's a piecemeal thing. Or do you think they're trying to get like a comprehensive tariff rate uh, as the output of these meetings? So is it going to be piecemeal, or are they going to be setting a new tariff rate? Let's call it an equilibrium rate that all countries are happy with. How are these?
I think it's going to be individualized to each different nation. I don't think they're going to get to a lot of the nations. I mean, listen, do you remember? Let's roll back to when this thing was in full force, and they said they had a deal with South Korea. They had a comprehensive deal with South Korea, and they said, I forgot if it, originally it was the EU. They didn't have deals with anybody, and it would take years to make full deals. So I think that they're going to implement tariffs. Really, I think they're only concerned with two countries, I would say countries. One is a lot of countries, but the EU and China. That's really where
Right.
they're.
So with China, like right now, all I hear is that they're talking about tech exports for rare earth. Right? They're like trading. It's like I'll trade you my this card for this rookie card for that rookie card. It's like very transactional.
I
Um,
don't. I don't
I'm
think
not
it's
hearing
going there.
anything about a new tariff rate or anything like that. I don't even think that's on the table. So maybe they come out of this meeting just with, a little bit of a deal, rare earths for tech, but the tariff rate, I doubt, is going to come down significantly enough for China to be happy.
But why
Uh,
would China? Why would China make a deal at 45% tariff? I mean,
exactly, and I don't think Trump. I don't think Trump is in a position, if he wants to pass the big beautiful bill, to lower tariffs significantly.
I want to talk about the big beautiful bill, but we're running late, so I don't really want to get into that because that's going to take at least a full podcast. But the bill, I don't even understand it. It goes against everything that he came into office to do. Okay, cutting pork, cutting spending, and I haven't fully analyzed the bill, but obviously there's a ton of subsidy in there for everybody to get this thing going, which is opposite of what he would think. But one thing I want to ask you guys, what I'd like to do on this podcast, because I like the format. We cover current events, we'll cover macro landscape, but I think we should get to 3 to 5 stocks that we're going to watch for a short, brief period, almost on a daily basis. But yesterday, we spoke about one of these stocks, and it was very interesting, the move in Tesla. So I'm curious, because I know, Eric, you traded a lot, I traded a little. Um, what what happened? I mean, the stock was breaking lower. I'm getting calls that there's big problems, and then I turn around and the stock's up 13, followed by another, I mean, not a lot, 5 today, and it's sort of back inside the range of where it's been, where it looked like it was about to go. We were talking yesterday, and you were like, if I could buy this thing at 250 or whatever, that would be great. But we're nowhere near that. So I'm wondering, what your thoughts are on the name, how to trade it, and this is out to you, Clint, as well. Um, what your thoughts are here in the name.
Yeah, I mean, I'm personally not too active in Tesla, but I follow it obviously just because of it's entertaining. But no, you look at where it's fallen back to. I mean, this would be an area you could see it rally because it's back to the 50-day moving average, which coincides with some price support at the 290 level. But I mean, this thing's going to be so headline driven. I mean, we're rallying because Trump decided he's going to keep the Tesla Roadster that he bought from Elon. I mean, that was the headline behind the rally. But so I don't know. Yeah, I mean, if it was gonna reverse off this drop it's had from the 350ish level, I mean, this would be the logical spot for it.
Yeah. Oh, so you're thinking, it's like a buy for a trade? Is that
Yeah,
what?
very short term.
Yeah. Yeah. I mean, I think lower to go there. I mean, I'm looking at the market cap in the name, and it's shocking to me. I mean, it's $1 trillion market cap. And I know it's more than a car company, but I don't know how much more. And that always worries me. Obviously, this is the original meme of memes. It was the original, stock that they rocketed out of COVID. And the public and the meme guys, the day trading public, love this name. So, I was just curious what your thoughts are. Same to you, Eric.
Last week when it dropped 14% on a Thursday, all right, because of the fist fight and the threat of canceling the contract. The first thing I did, I was like, well, what percentage of of its total revenue is government contracts? It's not a lot. Number one, it's just not a lot. I think it's like 5 or 6%. The stock fell 14%, in one day. So, I texted you that night. I'm like, I hope this thing doesn't gap up tomorrow because I'm gonna miss the trade. And it, and it gapped up. But yesterday, I was like, you got to kind of like read the room. The market retail is back. Then they're frothing at the mouth again. I just know it. And when they're frothing at the mouth, it's you got to kind of step aside and let them do their thing. We talked about it yesterday. Citadel, Jane Street, they see retail hungry. They're they're going to amplify it. You know, so I would love to get 270 or 250. I just, yesterday I decided I don't think I'm going to get it. And I just went into it.
I don't know how, like Clint said, it's so news related. I mean, you don't know what you're going to get. I mean, you just don't know. So, I would keep an eye. It's a great trader. We're going to look to potentially put a position on in there shortly. If we get an up move, of any significance, I'd want to sell that. Again, I'm not loving the downside, but if it trades down there, maybe it's a buy. We bought it when it got into the, low 230 area. We didn't stay long enough. We made money on that trade, but we didn't stay long enough. But, we're definitely focused on that. And, I know we're going a bit long here. We're about 15 minutes before the opening, so I want to give both of you guys
Straddles
the
at 29. What do
opportunity.
you think, Larry?
What?
Straddles at 29. What do you think?
I don't know. This is giving me a lot of this gray hair up there. Before the last month and a half, I didn't have this much gray hair. We're
Is it
down
because
in
of the
our.
market or because of Thomas?
It's no because of the market. It's been choppy. Our best product, the S&P Trader, where we do these credit spreads, is down on the year. We're clawing back a little bit, but it's definitely been one of our choppiest years for our best product. And when you're talking about, the straddle, we price the straddle and then we determine what we're going to do for the day, whether we're going to look to sell a put spread, a call spread, or both. And, the market's, I think, mispricing the moves. 29 on a $6,000 instrument is tough. So you have to really be right on direction. So it's been tough, for sure. So we'll be in there today. Not exactly sure in what, but look for a trade in your inbox, at the Opportunistic Trader on that. And again, going over the
I'm
scenario.
hearing from you. I'm hearing from you. It's going to be an iron condor kind of day again.
Yeah, yeah. Every day you say that, it never works. So it's
It worked
I'm calling
yesterday.
you. I'm
It
calling
worked
you.
yesterday.
I'm
It
calling you.
works every.
I know it works. Anyway, I'm calling you the jinx. I'm glad you guys joined me today. I don't know if either one of you guys want to close us up today. On sort of what you're thinking for the day or just in general. So I'll throw it to you guys. I'll let you guys close us, and we'll go from there.
Yeah, I mean, one thing I'm watching near term, I don't see, a ton in the equity markets right now that's interesting to me, but maybe the U.S. dollar index (DXY) is maybe making a just very near term double bottom, and if you start to see some strength in the dollar, is there a short opportunity in the pound there?
Excellent. Anything from you, Eric? What are you looking at?
Obviously, Tesla. I'm in the Tesla trade, but I'm looking at two other stocks: AST Space Mobile, one of my favorites. Maybe a Jeff Bezos investment into it, and just because I feel like retail is hungry and excited and has a lack of fear, I'm looking at stocks like Oklo again, OKLO,
Hi.
AST. Yeah, those stocks are back,
Ay,
man.
ay, ay.
Come up on your radar. You know what to do.
Okay.
Then you better
Well,
look at Rocket Lab.
I would leave us with this. Retail, like the guys are saying, are definitely coming back into play. Eric had mentioned, for weeks, the buy levels have been pretty high. So I think I would be a little bit leery in here because I think if you look at like averaged in, where these guys are averaged in is probably at 5,900 ish on, each stock is different, obviously, but just in general on the S&P, you're seeing like the volume come in at 59,
Yeah,
100
very
area.
high.
So,
Nobody bought
so
low. Everyone
any
bought the
type
high.
of any type of pullback will put retail in a bad
Agreed.
spot. So I'm
I
gonna
agree
keep
with you.
on an eye on that level. My level on the downside is 5,800. We're not going to see that obviously today, but I think quiet overall unless they come out from the meeting, which they're not going to, and say it broke off bad or it broke off good. But just quiet day. Keep an eye on all the stuff that we spoke about, and we'll be back to everyone tomorrow. I am not going to be here, so I'm going to let Eric and Clint run the show. And I thank everyone for joining us to watch today. And good luck trading, and enjoy the day. Peace.